When will Bitcoin price decouple from traditional markets, and what are the signals to indicate that a decoupling trend is growing momentum? So this is a very loaded question, and it kind of dovetails into a lot of the themes we're going to cover today. So first of all, let's look at decoupling. Let's look at Bitcoin to the typical risk on asset, the QQQ, which is a measure of the top 100 NASDAQ tech stocks. Since January 24th, the delta between both assets is quite staggering. It's about 12%. The QQQ is down 17.69%, while Bitcoin only fell about 5.84% in this window. So right now, Bitcoin is holding up better than NASDAQ equities, tech stocks, and a whole bunch of other assets too. Right? You can put everything in there, gold, bonds, etc. It's doing better. Now, the signals for decoupling, it really goes back to the narrative as to what Bitcoin is for. So some of the signals we're looking for before we jump in, there's a lot of weird stuff happening out there in the markets, and Bitcoin tends to decouple from markets and do its own thing. And sometimes, like when you look at Bitcoin for a long time, it tends to do things when you least expect it. And sometimes periods of low volatility precede a bounce. So we'll watch for that. But there's a constant battle between speculators and investors in this space. And we're seeing that. We're seeing that in the option action. That's why we look at a lot of the option action. You can see the way they big option plays are kind of putting a lid on the action as we go forward. Now, decoupling comes from adoption. We see huge organic adoption happening. We have a member in the community, and he said his sister out of the blue was anti Bitcoin and crypto for the longest time, and she just bought a Ledger wallet or something the other day. Anyway, very interesting to see that adoption. But one of the key things that we really need to look for as well is the stuff that's going on in the macro world. We're not looking for kind of signals per se, but it's a combination of factors, or we call dominoes. So the weaponization of the dollar, the West freezing Russian central bank reserves, and apparently they're never going to unlock them. They're gone forever. Number two, Canada and the truckers. Won't get political, but that was a big wake-up moment as well in early January. Then El Salvador, last year's news. Then you have everything going around commodities and people wanting to trade their valuable commodities for real hard assets. That no longer includes fiat, ladies and gentlemen. That's a big wake-up call. And then you have the Chinese policymakers openly questioning holding foreign reserves. Remember, China owns about 4 or 5% of US debt, last time I checked. And then we have the chronic inflation. And that all leads us to, the inflation narrative. Is that coming? So let's look at a couple of things. Let's look at gold as an inflation hedge. And does it work? So here on this graphic from Coinmetrics is if you look at the red versus blue. Blue is when it beats inflation and red is when it doesn't. So over 8 and 4 year windows, you can see that gold has actually performed really badly. Very, very spotty record at best. But you know what? It's the best thing people had up until about 11 years ago. Now let's look at the inflation hedge of Bitcoin historically. You can see Bitcoin crushes gold despite its short history. There's very, very little red. And over a 2 year period, a tiny amount of red. And the rest is all blue. So historically speaking, Bitcoin is already the better hedge. And that is kind of critical to look at. So there we are, decoupling. It's already happening. The adoption will drive a faster range of decoupling. All the young people that are getting money today, they're investing in crypto. They're not buying equities. They're not buying bonds. They're not buying gold. They're buying Bitcoin and crypto. So we're going to see a lot more of that as the adoption continues, I believe. But it'll be slow and gradual, but it's already happening.